Hello, everybody. Welcome back to the station. My name's Max. My station's name is The Covered Caller. Tonight's going to be a live stream edition of the Daily Factor. Then after that, we'll go into our normal live stream. But let's start here with the Daily Factor. So I didn't really publicize this one much last night. I didn't publicize this. Last night's was called Tesla Tuesday. We actually, though, cheated, and we also did Misty and NVIDIA. So, and I'll do some, I know you guys like single stocks. Maybe tomorrow night we'll do Coinbase. We'll pick, I'll find another 3 single stocks or something. But tonight is, Maximum Wednesday or whatever. Tonight's the funds I like, the hedge fund style ETFs, the ones that are able to switch the stocks in and out. The ones that typically they also use more advanced strategies. They just aren't blindly buying an index. They're more actively managed. I'm going all the way from something that's super actively managed like Alti with super complex option strategies or blocks down to something like SEPI, which is still, they do move stocks in and out of SEPI and they only use monthly options. It's a little bit different strategy, but it's a fair comparison. We're going to look at Chippy and everything also. All right, let's talk really quick about what the max factor is for the new people. The max factor is my own metric. Traditional Wall Street doesn't have a good metric for these high yield funds. The high yield funds broke the matrix, or they broke the metric, whatever. There's just not a good metric. The max factor is Morningstar for a new generation. Morningstar, whatever, that's your grandfather's rating service. This is a better rating service. All right, guys. Well, it is specifically made to understand what all I've done is instead of looking at total return, which is all fund managers will tell you to look at, and that's fine. It's all traditional Wall Street has to offer. I break the components of the total return out, and I look at them separately, and I look at how the total return is made, how the game is played, how the races run. All right, guys. I just got cleaned up, just got out of the shower. All right. Anyway, sorry I kept clearing my throat last night. I shouldn't have gone jogging right before the show. All right, guys. So the Daily Factor. Let's start with the Hedge Fund Wednesday, Multiple Stock Wednesday, or whatever, Portfolio Wednesday. I hope you guys like these portfolio ones also. If you don't, I'll do something more like you guys like. Oh, and I have some other stuff that's cool to look at as well. We're going to look at my shopping list. Okay, so let's meet our contestants tonight. AIPI. That one is it's from Rex, stablemate to SEPI and FEPI. And it is actively managed. Not super actively managed, but it is actively managed. And then we have blocks. Speaking of super actively managed, these guys are hands-on to the nth degree as far as even moving spreads up tighter whenever they think the market's going to go down. Whereas you aren't going to get as much of that kind of stuff from Rex. All right, well, then there's SEPI from Rex. Then we have Chippy. Well, Chippy from YieldMax is on there also. It's a portfolio of microchip stocks. Then we have Eggs and Eggy from Nest Yield. I'm not going to get that started tonight. I probably cannot promise. I'm not going to get that started. Let me drink a big sip of water. I apologize for last night. I listened to part of that show back, and it was hard to listen to, but thank you guys for putting up with me. All right. Eggy and Eggs from Nest Yield. Then we have GIAX from X Funds, and that's fairly actively managed. I think it's a portfolio of international stuff. GPTY. Now GPTY is that one's a special one in my opinion. Then we have KQQQ. That's a special one also. That's from Howard, and he was on the show, I think, the day it came out or something. I need to get him on the show soon because KYLD is coming out. I need remind me to email him tomorrow, somebody. All right, I'm just joking. I'll remember. Then we have LFGY from our friends over at YieldMax. That one's something special too, in my opinion. Then we have OARC. I'm counting that as because Kathy Woods moves stocks in and out. I guess it's not superly actively managed, but I also put Omaha in there because it's another basket of growth stocks, that are managed and you know, it's not an index, it's a whatever. Then of course we have Alti, and then Will. I thought Will might be interesting. I really haven't looked at this so much, but I think this is a fair one to be in there. All right, so which ones are your favorites? We got any early favorites here? Hey Marcus, how you doing, bud? All right, well, let's do this. Show the comments. All right, so back to this. Sorry about that. I just wanted to check in with you guys. All right, so yield. Let's just chase some yield. Why don't we? Oh, number one, numero uno, Alti, 127%. We'll just call that 128%. Now, part of that yield, they don't really pay that high of a yield. It's actually about on 80%, but it's a trailing 12-month yield, and their price has been declining particularly bad lately. But anyway, the max factor figures that out. It doesn't really give them credit for the full 127, but nevertheless, that's the full, that is the trailing 12-month. Then we have LFGY, 72%. We have OARC, 53. We have SEPI, about 40. AIPI at 36. Chippy at 34. GPTY yielding 30. We have a bunch in the 30s. SEPI, AIPI, Chippy, GPTY, and we'll call blocks in the 30. It's close. Come on, blocks. Just get up there in the 30s. Then the next like level down would be GIAX, EGGY, Omaha, Will, Eggs, and then finally KQQQ. All right, so that's your favorites. I was just checking over here. Which ones do you guys, which one are your favorites? You know which ones my favorites are because I never shut up about them. I always talk about I have 3 favorite funds. You know, anyway, and speaking of my favorite funds, we'll look at the, after this is over, we'll look at the Terrific Trio. We'll look at the Lightning Spread, see how it did today and everything else. So just be patient with me, guys. I appreciate it. You guys always are. Price 90 days ago, that really doesn't matter that much. Let's look at the quarterly NAV return. All right, look at this. Blocks has the best quarter as far as NAV goes. Heck yes. Then we have, and that's that Lightning Spread. Also, we can talk about the Lightning Spread later tonight. I've been getting a bunch of questions about it. If you want, we can do a little like 5 or 10 minute explainer on the Lightning Spread. In any event, Chippy, they run covered call spreads. KQQQ, they do whatever the heck Howard wants them to do. That's, you know, they do callers, they do covered calls, they do whatever Howard wants. That's definitely a hedge fundy style investment. Then we have Eggs. Now, I believe Eggs or Eggy, or maybe both of them, have a put spread overlay for a hedge component. GPTY at times has had put spread overlay for hedges. LFGY also has a put spread sometimes in the micro Bitcoin index, and just in case Bitcoin takes a dump. So anyway, SEPI, I don't think has downside protection, but they just sell monthly options typically. So they have a little bit that kind of gives you protection too in a different way. Then we have Will. Not really sure too much about Will. I know Marcus is a Will fan, I think. Then we have AIPI, so these are all the ones positive to have. GIAX. Then our NAV laggards are OARC, Omaha. Then my 2 favorites, or 2 of my 3 favorites, LFGY and Alti. All right. Well, which ones are the most volatile? We know it's MST. If MST is around, it's always the hottest mess, but it's not around tonight. So we have blocks, LFGY, OARC, SEPI, Chippy, Eggy. And first of all, so blocks is in the 40s. That's 3 times as volatile as the market. Then about twice as volatile as the broader market, LFGY, OARC. Then we have the next little level down is about 50% broader than the 50% more volatile than the broader market. We have SEPI, Chippy, and Eggy. And then and Alti and GPTY, about 50% more volatile than the average, than the broader market. Then, not very volatile. We have AIPI, KQQQ, Eggs, GIAX, whatever, Will, and Omaha. All right, which ones are you guys pulling for? I think I know. I can't really vote because it's a conflict of interest. And plus, like I say, I never shut up about what I like. So, it is what it is, right? All right. So you ready? Let's go back and see who the winner is. Oh, you need a zoom in button? I'm sorry, bud. I'll work on the graphics. I'm working on making the show better. Maybe I'll work on that easy life. My bad. We'll fix it. Yeah, I'm sorry. Well, I'm trying to narrate it. So, okay. All right. So we'll just start at number one. We'll start at number one. Oh, I know people are going to like this one. Chippy from our friends over at YieldMax. Now, this one's been on fire. Wow. 34% yield. Its price has gone from 53 or 54 to 60. Right. Well, 53 and a half to 60. That's even better. 12% quarterly NAV return, volatility very reasonable at 24. That's, twice the broader market, 1.5 times, something like that. Then we have GPTY, which is one I sold half of my position in today. But I did really well. I was trying to monetize some gains, take some risk off the table, and there you have it. Then we have blocks. Oh, yes, sir. Yes, sir. So this thing's gone from 23 to 26 bucks. It's up $3, otherwise known as 13.23%. Nice job, blocks. Then we have Eggy. This one's kind of a stealth one. You don't hear that much about this one. NAV's good. You went from 37 to 42, up 5.82%. Volatility is about a 21, about 50% more volatile than the broader market. Next, we have KQQQ from Howard Chan, yielding 9%, but giving you 8% NAV return. That's just this quarter. So, I always talk about a balanced fund. You have half in NAV upside, and in this case, and then half in yield. All right, then we have Eggs. Eggs has about a 10.9% yield, quarterly NAV return of a positive 7%. Good job. SEPI's a good-looking fund. I mentioned that SEPI and FEPI use monthly options. Monthly options typically get a little bit less income than weekly options, whereas LFGY uses weekly options, but they have similar funds. LFGY will probably yield about twice as much as SEPI when we get down to it. Anyway, monthly options are a way to go. I always equate these guys kind of with tasty traders. The tasty trade methodology is sell something 30 to 45 days out and cover with the week or two left. So I think that's pretty much what they do. And it's a real slow and it's a steady way. They say slow and steady wins the race. AIPI, good job. This one's based on AI, 36% yield. NAV's up a little bit on the quarter. And a 16 vol. Volatility is equivalent to the Qs, basically, the NASDAQ. NASDAQ's pretty volatile, but nothing we can't handle. Then we have Will with only a 10 volatility. That's, that's much less volatile, much safer on a comparative basis. Yield was 12%, call that 1% a month, and it had 2.84% NAV return, and a low volatility. That one's a good one. Then we have GIAX from X Funds, yielding 22%. NAV went from 1765 to 1790. It's steady NAV. That's over a quarter. So steady NAV plus a 22% yield. That one's, you could do worse than those stats for sure. And a 14 on volatility, pretty close to market volatility. Then we have OARC, Kathy Wood's kind of project, I guess, but OARC is actually YieldMax's project, selling options on Kathy Woods' stocks. But Kathy's had a good record at various times. Oh, and then we have Omaha down here. Now Omaha is based on Berkshire, and Berkshire, I was talking to somebody, maybe you, Marcus, is kind of in the dumps lately. But the thing about Berkshire B, the underline, is it was up during April. It's not like a black swan fund or whatever, but it had some it was less correlated to the market, definitely. So it has a high degree of safety. Of course, now the market's back to melting up. It's going to be a little bit behind because it has all those safe safe stocks. Omaha, then of LFGY, my second favorite one, and then Alti, my first favorite one, is dead last. But let's look at LFGY first. 72% yield this quarter. Okay, price has gone from 37.63 to 35.76. Let's drop $2. 37.5 to 35.5, basically. Okay, well, that sucks. It's only 5%. And it's paying a big yield. But what were we saying about SEPI is a real good comparison with LFGY. Similar stocks. One uses weekly, one uses monthly. Weekly's more slow and steady. You get about half the yield, but you get more upside. Sure enough, LFGY had negative 5% upside, similar stocks. SEPI, squeaked out a 4% upside. So good job. And then Alti has just been getting throttled lately. But in any event, it's paying a 127. Like I say, that yield's a little bit deceiving, but the max factor doesn't give it credit for the whole yield. And that's one of the reasons it's in last place, because part of that yield is related to the, declining performance lately. But in any event, yeah, this one is a hot mess right now. It really didn't finish at 496 today. Yeah, it probably did. It probably did. I didn't look at the last price of the day. All right. So unfortunately, that one's down 20%. Volatility is reasonable, but unfortunately, it's not helping us out much. There's more to, it's volatility is how much it goes up and down, but it doesn't tell you direction. So maybe it's going down, slower than maybe MST might go down with a 90 vol, but, what's that really saying? All right. So that is it for the max factor or the daily factor tonight. That's my daily show. I'm going to take questions on that, and then we'll start the live stream, or we'll start the regular show. Hey, Jonathan, how are you doing, my friend? I got to give a shout out to Jonathan. I was talking about Coach the other day being one of my closer influencer friends. I bounce stuff off Coach, influencing stuff and stuff like that. But Jonathan, I forgot about Ambassador of Quan. He is helping. We talk a lot about influencing too, and he's given me a lot of advice on stuff I could improve on my station. And anyway, I really appreciate you, Jonathan. I just wanted to publicly acknowledge you. All right, Blocks and Nagy. Yeah, well, Blocks look good. Blocks look good. All right, so what's Marcus saying? You think Trump and Xi will make the market rally? Oh, do I think they will? I don't know. I hope so. Alti dropped another 100 million. Yeah, bleeding horribly. Yeah, probably people are also, and I'm part of that. I dumped some of it today or yesterday or whatever. But yeah, it is bleeding AUM. But to be fair, it got way too much. It went from 1 billion to 3 billion. Remember when Alti first came out, that was the only show in town that was doing that. And then gradually other things came out that are doing the same thing. And then we had, or something similar, like Blocks and stuff like that. But at one point, Alti and LFGY were the only show in town. Well, then we had Blocks come out. That's going to take some AUM under. I predicted that Blocks would be $1 billion fund when it had 90 million. It now has I think 150 or something. I'm surprised it doesn't have more. It will soon. Part of that money is going to Blocks. Part of it's going into other things. And I bet you some of that's coming out to go into KYLD and into the Rex one, which is ULTI. But we'll see what I know. I don't have any inside information. Anyway, thanks for your comment, Joe. Okay, Marcus's favorite is CAIE. Yes, you can't argue with the steadiness. We'll some night I need to do a show. Well, we need to find where that is in the max factor too, or to kind of drill down on it and find something to compare it to. Maybe I'll put it in. I'm going to have like a SPY Saturday where we look at all the SPX funds and all the Q funds or something. That's basically an index fund. They're selling auto callable bonds, but they're selling it on the SPX. So that will probably throw it in with there, but I'm sorry that doesn't get the love it deserves, Marcus. I'll try to address that. Yes, RH Gold Fund. Okay, well, I'm looking for a gold fund. I'm leaning towards K Gold. I bought K Silv today, right at the end of the day. Well, I'm going to talk about my changes to allocations here in a second. Second favorite is Will. Yeah, I knew you'd like that. I'm sorry about the zoom in. I really will work on the things. But yeah, so the max factor is kind of a trading index. I realized that people were trading these more than allocating them, kind of me too, chasing yield and stuff. So that's what the max factor is trying to look for. It's kind of what have you done for me lately? And yeah, Alti has not been doing great lately, of course. And like you say, people have been selling it. I sold a little bit today now because I don't really like it, but I wish it'd been doing better for sure. Alti will change her strategy after the new year, I think. Yeah, possibly. If they do, give me the prospectus and we'll evaluate it. And I'd love to take a look at anything they do. Those guys are always innovating. I just think that those guys innovated really fast, and A year ago, there just wasn't anything else that was doing that. And now there's, we have all kinds of things. So anyway, yeah, reverse split's probably on the way at some point. All right, maybe a dumb question. There are no dumb questions. Easy life, but is the expense ratio up? Yes, the expense ratio does hurt the NAV. It comes out every day. So if it's a 1% expense ratio, you divide 360 or maybe 200 business days, or no, probably 365, and they just amortize it like a loan or whatever, and they take out 365th, whatever, every day. Now, the thing is, it comes out of the NAV, and so my calculations, Morningstar's calculations, all the stuff you see, includes the fees. They're already coming out of it. But absolutely. And that's why a lot of people say, hey, I could do better on my own. I know how to do, poor man's covered calls and I can do X, Y, and Z. Well, heck yeah. And not only that, you don't have to pay yourself a 1% fee, and so, yeah, that absolutely adds up. And, and the better these funds do, like something like blocks, it's just been killing it lately. As their assets, well, not as their assets go up, but as their NAV goes up, that 1%, well, I guess it's NAV and assets go up. That 1% amounts to more money, and it's more of a drag. But of course, if the NAV's going up, everyone's happy. But it turns into a bigger pile of money. But absolutely, not a dumb question at all. Not a dumb. And that's why I'd say 3/4 of the guys in my Discord don't really. I mean, they may have a few of these, but they're mainly doing stuff themselves. But some are a little combination of both. Hey, Ambassador, I've already said hey to you, gave you that public acknowledgement. Ambassador's really been helping me out. And I also mentioned Dan. Dan's not an influencer, but Dan's also helped out some or a lot. Anyway, what hurt the NAV paying out more than when you pull in? What hurts is the NAV paying out more than what you pull in. Yes, absolutely it does. 100%. Max, why don't you just YOLO into we'll talk about me. Why don't you just YOLO into WPay? It's your, I got to watch out for me and my family, but we're going to talk. We'll get to that. Round Hill's good. Round Hill's good. I mean, there's no doubt. Okay. But I think Rex is good. I think Max is good. I mean, I think that they're, I think YMAX is a good fund. I think YMAG is a good fund. I like Alti. I don't care if you guys don't. It doesn't matter to me. But yeah, Round Hill's really good. Rex is really good. Granite Shares kind of having a little bit of some rough time lately, but I mean, heck yeah. All right. Yeah, no, it is a part of it. Absolutely, it's a part of it. Because yes, it is a part of it. And especially when you get funds that only charge a 1/4 point or something like JP Morgan or 39 bips, and another one charges a full percent, it's 3 times the fee coming out. So yeah, it definitely matters. Yeah, you're excited about GLDW. Well, I mean, I'm looking for a gold one. Will that go into WPay? I mean, I would be fine with that going into WPay, but anyway, it may not. WPay maybe for stocks. So you sold 200,000 shares of ULTY today. Too much erosion and lower distribution. Yeah, I hear you. There's Mike. WPay's only weakness, if you want to call it that, is holding the underperforming funds and direct exposure to Bitcoin. I thought direct exposure to Bitcoin would be something we're excited about. I mean, isn't that good? I mean, I'm not getting how that's bad. I do get the underperforming funds. I'm following you there, not following on the direct exposure to Bitcoin. I mean, the holding the underperforming funds, it's a fund to funds. What are you supposed to do? I mean, the funds that are underperforming this 6 months may not be underperforming the next 6 months. They're making their own index. That doesn't bother me. I mean, that doesn't bother me. But if it bothers you, like I say, we can talk about it. I am willing to listen to other dissenting opinions for sure. Yeah, heck yeah. Congratulations on monetizing that. Hopefully you got in like I did and you've been in it for a year. I figured with Drip, the portion of the LT I monetized was up 31%. So I mean, that's, you know, in 10 months, I'll take that every time. Oh, no direct exposure to Bitcoin. Okay. Okay. Yeah. I got you. Yeah, that could be a problem. I was going to say, I thought we liked Bitcoin here. Howdy, Mike, out there in the Philippines. No way. Yes. Okay. WPay stock and equity only. I thought I'd heard that somewhere, but I figured you guys would strain me out on that. Were that not the case? All right, guys. So what do we want to talk about next? Let's look at the market. Let's kind of do a really quick. I'll try not to dwell on it. Let's do a really quick report. We'll look at the terrible trio, lightning spread, market. But then I want to show you my shopping list of what I did, and you guys, and then we can talk about why maybe I should just load up on WPay or whatever. Then you guys can keep pitching ideas to me, or I'll pitch an idea or two to you guys. All right, market. Do I want to look at the market? Which, oh hell, yeah, it's up 1/3 of a point. I mean, that's fine. Look, it's right here. Are you serious? I mean, it didn't. I mean, it looked like on the chart. I looked after Powell speaking. I was like, hell, here we go again, because it was this big first red bar down. But you know, and then I was thinking about what I'm going to buy, and am I going to get a cheaper price or whatever. Then I looked at the change. It was only down 34 basis points. It just looked big because it's been, you know, that right now there hadn't been a lot of volatility, and that looked like a big move. Well, look where it went it went almost to where we'd expect buyers. These open gaps are like invisible upside pressure while they're still there. So anyway, you can see it kind of acting like that today. We'll see though. So let's do the Qs and see, maybe the Qs look worse or better. Now I know that Facebook missed earnings, or well, I don't know, missed earnings or something. I know that they were down 7% when I was watching CNBC this afternoon. So I thought that might crater the NASDAQ, but it hasn't. As Trump tweeted, do we have a deal with Xi or something? I mean, things are looking good to me. Things are looking good. To me, maybe not for me, since I'm 34% in cash and we're getting ready to make a new all-time freaking high. Whatever though. Anyway, all right. That's fine though. That is fine. Did anyone see Jeffrey Gundlach on CNBC this afternoon? It was a great interview. He's on every Fed meeting. This is his 34th Fed meeting that he's come on, and they've interviewed him, and he's just a wealth of knowledge. But he was saying, hey, and you guys rebalance your portfolios. That's one of the strongest tools as a trader or an investor. He goes, a lot of things are way up, you know, and he said the same thing I was saying this morning. He said, you know, you may have something that used to be 20% and now it's 35%. Not that that's bad, but if the market reverses and then momentum goes the other way. So anyway, I tried to find that clip and I couldn't find it. So anyway, but yeah, the market's looking good. I mean, right here, let's see if Bitcoin can ever get its butt in gear though. Let's look at, we'll look at Bitcoin futures tonight. Oh, double play, bottom of the 7th, Toronto up 5-1. All right. So, boy, they hit a sharp foul ball right straight backwards, and it hit the guy. It hit Mary Hart's husband. He's some old producer named Bert Sugarman. He used to have a show on in the 70s called The Midnight Special. Anyway, but I guess I didn't see it, but I guess it hit the net, and the net slowed it down, but it still bumped into him. I think he's all right. They were laughing, but all right. Let's see here. Well, I mean, I would just feel better if this could start trending up on the time frame I follow. You know, turn the moving averages green, maybe be above turn at least one of the moving averages green. I guess the slow moving average is still green, but it's going to go red tomorrow. Which doesn't matter. Moving averages are slow, but I would like it to at least be on top of the moving average. That's, you know. But anyway, we'll see. We just got to take one day at a time. That's kind of been weighing heavy on the market, hurting some stocks worse than others, as you saw in that list. But that's why we look at the max factor. We're data driven here. All right, I try to be. All right. Well, Bitcoin. Okay, so let's do this. Lightning spread. Lightning spread lost a little bit of ground today. It wasn't really up 37 bips. It was up like 1 bip, but I had to add in the 19 cents. They declared a dividend. I just assumed it was 19 cents. I put in the same one as last time. I didn't have time to look it up. If it's something different, somebody tell me. But anyway, you guys probably know it. I did that the other day too. And then when I found out what it really was, I put in 1941 and it was really 1925. So then I switched it. It's not going to make a material difference unless they paid like 10 or something. One of you guys texted me. I want to make sure I'm not doing something jacked up, not sharing the screen or something. All right. So back to the lightning spread. Okay, here's the cumulative performance. This ball game's 65-64, where the lightning spread is behind by a point. Now it's a basketball game. We'll just visualize a basketball game. But this, what they're doing right now is the equivalent on a relative basis is playing ball and getting beat 64-63. So it's tight. I mean, it's close. At least we aren't getting beat 12-5 like we were for a while. All right, and here's the daily change. I already showed you guys this. Like I say, that's not the actual daily, that is. You had to add the dividend. It went X today, so to get the true daily, that is the daily change. Anyway, it doesn't matter. They beat us in either event. Q's beat us 45-37 on a one-day basis. We were coming off a two-day streak. Pretty nice little wins. 196-78, 109-77. I always talk about variance. It's your average that counts over time. Some days you're going to do better. Some days you're going to do worse. Today was one of those days. We did a little worse. 2 days ago, we did a little better. All right. The terrific trio. So let's look at blocks. Well, blocks is up here. So blocks down 88 bips. Good job protecting capital. Decent job because the average stock was down 80 bips. In other words, if they just had these stocks like a mutual fund would have back in the day, they would have been down 80 bips. We don't want to see the stocks down 80 bips and them down 240 bips, 3 times what the stocks are or something. So that's acceptable in my opinion. LFGY. This babe was down 67. Okay. Good job. Nice job there. Average stock was down about twice as much. These guys don't have downside protection. Neither does blocks, but typically they don't. But David's been known to add some, and I didn't look at the daily trades. David's probably he may have done something. But in any event, and also they don't have identical stocks, but to the extent that they have a lot of stocks in common. But PayPal's killing LFGY, BitDeer. All these stocks, down 5.2 XY. That's Bitmine immersion. So yeah, these guys are getting beat up. So I can imagine what Alti's going to look like now, except they did move their puts closer and hopefully they've got it hedged pretty well, but it's probably not going to be pretty. Let's go look at it. Oh yeah. True to form. Scott was on the show last night saying, that they moved the puts up and they were in the money because the market fell through the puts and he left them there. You remember what I told you guys last night? I said, okay, if the market blows back up tomorrow, then it'll look dumb. It'll look like a bad decision. They'll wish they would have monetized those darn things while they're in the money. People on Twitter will call them stupid, but people on Twitter will call them stupid anyway. But the opposite happens if it keeps going down or even stays the same or whatever. It'll keep protecting them, and that's pretty impressive to have stocks that are this crazy on the downside. Bitmine immersion, Rocket Labs are down more than 7%. Now, to be fair, though, they caught Symbotic on the upside, and that may have as much to do. And Symbotic isn't in LFGY, and that may have as much to do with the lack of downside as the structure of the options. But yeah, good job, guys. These I always say job one is protecting capital. Actually, I didn't say that. Once somebody in my Discord said that, and I agreed with them. I said, yeah, you're right. Job one is protecting capital, 100%. Once you're out of money, you can't trade anymore. So, you only get one shot with your capital. All right. But yeah, Rigetti, it definitely helped having Rigetti and Symbotic up big time. Let's go back to LFGY and see if, they didn't have Rigetti or Symbotic. So once again, another victory for Alti. It's a very well-managed fund, I think. They're on the wrong side of some variance right now for sure. But in any event. All right, so we don't look at Salty anymore. Maybe we need to start, but I really haven't heard anyone griping about it too much. All right, so let's do some we could skip the index buffer report. I don't really get the idea anyone's that interested in that one. Let's just see what you guys are up to. Then we'll talk about my shopping list. If you guys want to weigh in or whatever, I'd be glad to listen to opinions or whatever. You know what they say about opinions. I'm just joking. I value everyone's opinions, or let's put another way, my opinions are just as bad as anyone else's. All right. So let me see what's going on here. Again, I'm just wondering if it's part of it. It could be. I'm with you on that. It very well could be. We're all excited about GLW. Everything's good. There's Jason with the big baller selling 200,000 shares of Alti. Great job. Great job. I hope you had success. I hope you had some upside and and your dividends have built up over time, but whatever. That's there, let me ask you this, Jason. What are you thinking about? Are you thinking about KYLD, or are you thinking about ULTI, or something else, WPay or something else? So many good choices out there. Okay, we already talked about that. No direct exposure. Okay, howdy, folks. I just want to make sure I didn't miss anything. Yeah, if you don't mind, hit the like button. Thank you for reminding people. I appreciate it. Yeah, I agree. Bitcoin is, that's the way you build generational wealth. It doesn't have to be Bitcoin, but it has to be a growth asset like Bitcoin. In the 90s, it was biotech. I've always mentioned my family had Eli Lilly. Eli Lilly did really well in the 90s. That was the tech of the day. That biotech, really big pharma. They came out with Cialis, Prozac, and 2 other blockbuster drugs, and they had 4 splits within 10 years. 4 2-for-1 splits within 10 years in the late 80s and 90s. So, that's how you create by being in growth assets. Wonder if you're an early investor in Apple or Nvidia. That's where it comes from, or Bitcoin. I'm so jealous of people that are in Bitcoin at 10,000. You have no idea how jealous I am of people that are in Bitcoin at 10,000. But yes, I agree with that. I'm not agreeing with that Bitcoin is the be all and end all, but whatever's the growth asset of the age, and I think Bitcoin is probably the one of this age, maybe quantum computing too. But yeah, heck yeah, go get that generational wealth. I'm pulling for you guys. The paycheck kid, I'm ready for a shopping spree. Me too. I feel good having cash. I feel I even though the market didn't do what I thought, I don't know if you guys remember a few weeks ago, when the market pulled way back, I was thinking about dumping some of this stuff then and rebalancing. I said, I've been meaning to rebalance forever, and I just don't do it. And what did I tell you guys? I said, the next time we make an all-time high, I said, somebody make me sell something. None of you guys had to make me, luckily, but that's, half this game is inside your head. It's not just all, it's art, it's science, it's whatever. It's the greatest game in town too. Speaking of greatest game in town, Toronto's up 6-1. Our folks north of the border, I don't know if Summit's in here, Summit Man, or Brad. I have Brad that's north of the border too. In any event, not the Brad that's the influencer. I think I have 2 Brad followers that are there. Yeah, they did give like I say, Gilmax may have been the first to innovate the covered call spreads. It may have been, I'd never known a fund that was running callers on individual meme stocks before. That was a brand new thing. But now people are doing that, and they've gone a step beyond. That's how competition works. You remember Apple for a long time had the phone market locked up, but then eventually Samsung got their act together. I still don't like them as much, but they eventually brought out a phone that had more features and was arguably, so yeah, that's the way it goes. So one company innovates and the next company tries to top it. We're in a consumer society here. I'm glad NVDW should pay out 1 or more next week, and I don't have to worry about choosing which ones are hot because I'm in all of them, and I'm fine with the junk. What junk does WPay have in there? They don't have money. I'm sure they have things that are going down, but that's the way that the stock market works. Stuff goes up, stuff goes down. fund to funds, I want an index. I think that's good that they have an index of all their stuff. I mean, you guys would agree they're a good company, right? They have good judgment and they have well thought out strategy. So, I mean, that's what I'm looking for. K Triple Q, nice job, Jason. I'm really curious. I mean, we'll talk about me in a second. I have that. I'm 50-50 on that or something else. I'm looking at that. I'm really looking at that one. Okay, Lily's new plants and what are not being built. Oh, Lily, are you in Indianapolis by chance? I mean, that's where my grandfather, that was the world headquarters. He actually worked for Eli Lilly International, and he worked in Tokyo, London, Sao Paulo, Brazil, and Mexico City. But then as he moved up in the company and he made vice president, they brought him home to Indianapolis. And I went up there in Indianapolis. It's beautiful. He took me to the Indy 500. It was the greatest thing ever when I was 9. I mean, it was the year Gordon John. I'm trying to think. It was Gordon Johncock, Bob and the Unser brothers and Andretti. I mean, it was the golden age of IndyCar racing. Man, such a good time. Those corporate guys get all that. I mean, we had a suite. We had ladies waiting on us hand and foot. You know how that goes. We had a ride to the gate, a limo, not a limo, but a big like party bus, Anyway, it was such a good time. From all the news and regulations happening, looks like XRP may be a good one. Well, good. Little Ripple showing up. All right, Jason. Yeah, CRF, CLM for drip and nav. Yeah, those are as good as it gets. We let's maybe on on SPY night, on SPY Saturday, where we're doing indexes. We'll we'll do this. We'll have a closed-end fund night. I have like 5 closed-end funds. We'll run them all. We'll have a closed-end fund night on the daily factor, and we'll start doing them once a week so we can track those. I mean, I think that sounds good. K Triple Q is the most slept-on high-tech income play. No one expected to do well this week. No one expected it to do well this week except Max. I don't know which one you're talking about, but it could have been anything. But we have to ask. Alti seems to be okay. Hey, you doing it, Udar? All right, but what will happen in bear market? Yeah, will the NAV ever recover? No. Will they? It's not designed for the NAV to recover. The market would have to be up 100% for the NAV to, we have to be anyway. That's not the way it works. It's like an annuity. Will the NAV earn dividends compensate for the NAV erosion? Well, that's anyone's guess. That's like saying if I buy this stock, I'm going to buy Palantir right now and I'm going to hold it for a year. Will I make money? I don't know it. Maybe and maybe not. It depends. There's too many factors to see. But just get out of it. No one else likes it. Get out of it. If you have it, and you don't want that to happen because it's pretty much the way it works. Like I say, I don't know how I made 29%. I guess I was just lucky. But I don't see what everyone's talking about. But maybe I was just lucky, like I said. But I'm not a great trader. I mean, I make, but I did really well on that trade, though. I did really well. So, but it may not be repeatable, and I may not be able to do that well next time. Okay. Oh, okay. Northeast Houston. Good. I like my Texans here. So Northeast Houston. Okay. That's cool. I have friends that are from Northwest Houston, Cypress, Katy. Of course, half the world's from Cypress and Katy. Don't they have like 197 high schools in Cypress or something? I mean, but Cypress is kind of like the equivalent of Frisco and Dallas. It's just suburban paradise, if that's what you like. All right, talk about where you think QLDY would go. Now, do you see growth in this one? Yeah, I think it'll have more growth than Alti. For one thing, it's paying a third of the yield. And so, it'll have more growth than anything that's paying 100%. Yeah, and not to mention they're doing lightning spreads. So in an up market, it ought to perform pretty well. I'm really high on the lightning spread. When we look at my portfolio, you'll see what I'm doing with it. That's the other thing. The lightning spread wasn't available even 3 months ago. The QLDY just became available. So a lot of people are saying, well, I can't believe you have that bad stock. Well, when I allocate it to it, I'm not going to trade every day. You can trade too much. When I allocated to it a year ago, it's the best in town. When I changed my allocation in March and in April, there was a newcomer. It was LFGY. So guess what? I added some LFGY. And now it's the third time I've changed my allocation. I'm trying to do once a quarter. I don't want to trade every week. You can get, I mean, so anyway, this is my third allocation switch. I'm saving one more for the end of the year. So this time, this time there's still some other ones. So now there's blocks. Now there's WPay. So we'll put those in too. Heck yeah. It's fun to play. The market's awesome. You just saw a driverless car, really. Now, I had a Waymo come down my street, but it had a safety driver in it. Yeah, it's like Sci-Fair for everybody. Yeah, I know it. My friend, I think he's from Sci-Fair. So I think that's the one. You have 1,000 shares of QLDY, but thinking about adding more. Okay, well, I'm going to do a show on, I'm going to do, a lot of people are asking me, well, what's the deal with why do they have to have stock if they sell a lightning spread? I mean, if they sell a put spread. And I say, you don't have to have stock, but that's what it is. But then it adds a little bit of risk. I'm going to try to type out and talk slow and show some graphics and do a lightning spread explainer show. Maybe that'll help you decide. But just in a nutshell, the lightning spread should be more like blocks. It should be kind of a hot mess in a down day, a little bit of a hot mess on a down day, but it should do really well on an up day. And right now in an up market, you're right. It's a ball game. We're behind 62 to 61. So, I mean, that's right there, right? You know, we could win the game on the next shot or whatever. So, but don't do it because obviously I feel don't do it because I said so, but I want to give you the information you need to make the decision. I'll try to give you the bad side too. And like I say, the only bad side is it's not going to have the buffer that something like something else would have. CanQ is a good one. Yes, it is a good one. That one is advertised as having unlimited upside, and I forget how they do it, but it's hedged. It's a hedged equity fund, but I don't think they sell calls to buy the puts. I think they use a little fixed income to earn the money to hedge it with, so they don't encumber themselves and it has full upside. Yeah, CanQ is a good one. I have other stuff to talk about, Marcus, but we need to. Yeah, that's a good one. Let's do this now. Maybe the CanQ can play into this conversation too. Maybe I need to add some CanQ. Maybe I need to put it on the list. All right. So that was tonight's Daily Factor. Thanks for watching that. I appreciate that. Some of you guys may not be that into that show. And I tried to, like last night, we had just the live stream, and I'll try to separate the Daily Factor. So, but tonight I figured you guys wouldn't mind. And I just kind of had a busy day. You guys saw my video about changing allocations. That took a while to do. And then I had a pretty good live stream. We had a good live stream this morning. So, all right. Portfolio reallocation planner. So I built something. So you may remember I showed this on or I hope you guys can see this. I told AI to make this bigger. This was too small. What was I, 32% cash, 33, something like that. Well, anyway, right at the end of the day, I bought K-Silv. Now that's from Howard. I bought it more as a vote of confidence for Howard. And I want inflation protection. As the government keeps printing money, I want some gold and silver, but they're both pretty high. And also I saw Jeffrey Gunlock, what I was talking about, and he was saying that he's out of gold and that he thinks gold's over, but silver may not be and stuff. So I don't know. I'm still going to get some gold also, just not really to time it, but just to have it. But it doesn't have to be, but now I have to find out which one I want to get. The thing is I have cash, so maybe I can wait for a little bit further pullback in gold. He didn't say it was over forever, but he didn't sound, he talked me out of it basically. So here's basically all that matters is what the parent asset is doing. Okay, so that's a 30-minute chart, but let's look at a daily chart to get a little bit bigger perspective. The 30-minute chart's rolled over, but on a daily chart, in a trending market, in a severe trending market, if you can get a pullback to the 50-period moving average, we're almost there. We almost hit it. I'm just that's what I was thinking. Okay, this is a pretty severe pullback. I'll get a little. I'll get a little, and then I can wait for a further pullback and either get more of this or add in some gold. But I'm definitely going to have a precious metals allocation. It's going to come to about 8%. So right now I have a half allocation, and it's about 4%. But anyway, okay, so that's why the cash is gone. So Alti's down from 18 to 18. It was at 19, but when I put 19, it changed. But when I put K-Silv in, it lowered the allocation a little bit. In any event. Okay, so, and I put a target allocation on that as 15, and I'll show you more about that in a second. White triple Q. Now, this thing, current allocation as of close of business is 11.59, and my target on that is 10. So then we have blocks. It's at 11.2, and it needs to be at 15, just like Alti. I mean, it's good. It's really good. Ow, hang on. Sorry about that. All right, GPTY. I sold half of that. So right now I'm putting it at 0, and I'm either going to get K triple Q or big Y in that spot to fill that role, a blue chip, steady-ish type ETF. The thing is, GPTY paid like a 35% yield, something like that. Big Y pays 12, K triple Q pays 9, but they're way more steady. Big Y is beating the SPY right now since inception. And I would be surprised if K triple Q is beating the Qs. I mean, it has been at various times. They're both great funds. So that's, but that's where that's going to go. But for now, I'm going to take that to 0. Hate to see it go, but I still have half of it. So I'm going to have to sell. I get to sell the other half. So maybe the market will keep blowing up tomorrow. If the market keeps blowing up, I'll wait till the end of the week, close on the highs on Friday, maybe, dump it there at a favorable price. It's a good problem to have, but I'm fine. It's my, I'm fine right now. Okay. Yeah. WPay, I don't have enough of. I just made a starter position on it, but that's going up. That's going way up. It's going to 15. So that I have 4 horsemen at 15. I have Alti, blocks, or not blocks. Well, yeah, Alti, blocks, WPay, and QLDY is also going to 15. Okay. And my GPTY is going to go to 7 because, I'll show you here in a second. Okay. This will make more sense in a second. K-Silv's at 4, but I need to add some gold somewhere, but that's the target allocation. We're there. And then Misty, I just rounded up to 1 for the sake of just letting this infographic figure it. Then these other ones, I didn't put anything in here, but they add up to a few percent also. Anyway, so check this out, guys. So I made this thing where I can add notes, and I was typing the stuff I'm telling you, but I just decided to tell you. But if I ever think of something, I think, boy, I'm just sick about LFG. LFG Vibe was so good to me. But anyway, that's fine. That's fine. You can't have everything. Okay, so here's here's the other horseman, BITK. I have to have some crypto in there. K Gold's going to be another 4%. Big E's going to be 7, and this is Big E or KQQQ. And I could go either one of them would be fine. I mean, either one of them would be fine. But right now, like I say, Biggie's beating the SPY since inception. That's amazing. It only pays 12%, but that's fine. I have a barbell approach. Luckily, I have WPay and blocks and Alti that are paid, 50, 30, 50, 80, whatever. So, all right. So now I thought this is really cool, though. So here's my old allocation, or here's what I have current allocation, cash 20. We just looked at this. Alti 18 on its way to 15, Y triple Q 11 on its way to 10, blocks 11 on its way to 15, GPTY on its way out the door at a big profit. That one has even a bigger profit than Alti has in it. That one was my biggest. GDXY was my biggest profit. GPTY was my second, and Alti was my third. But Alti's GPTY is killing it. Going to take that off at a profit, reallocate into like we talked about, Big Y or K Triple Q. Then WPay, of course, Y Spy. Y Spy's done. I don't dislike it. I don't have any problem with Y Spy, but there's just, I mean, it was just a starter position. I liked it all right, but I just don't like it as much as QLDY. And to me, they feel kind of the same role. QLDY, a leverage spread, has partial leverage or synthetic leverage. Between the two strikes of the put spreads, you're double long exposure to the market. Y Spy sells options, but they sell options that are triple, leveraged on triple leverage companies. So it's a similar thing. I had to, so Y Spy's done, unfortunately, but I haven't sold it yet. So once again, I hope if the rally keeps continuing, I'll use it to put some of these proceeds into to buy extra blocks and buy extra WPay. But yeah, I'm all about WPay. It's going to 15. So I have 5 horsemen actually, but we'll get into that in a second. Then K-Silv, 3.59, Misty and the rest. Okay. So here's the target allocation. Yeah. So I guess it is 4 horsemen. Alti, blocks, WPay, QLDY. And then, BITK, Y Triple Q, down to 10. It needs to go down to 10 to make room for some of these other ones. And I put Big Y instead of K Triple Q, but just because that's the way I'm leaning. I'm a little bit of a yield chaser. If I find 2 funds and they're equivalent, and they're performing pretty close or whatever, I'm going to look at the management. I like Howard, but I've already bought K-Silv from Howard, and I'm probably going to get K Gold from Howard. So, and I have a lot of confidence in Scott Snyder and what the guys are doing over there, not to mention numbers don't lie. And since inception, this fund's beating the SPY, like I mentioned about 1 million times. And that just doesn't happen too often. It's a special fund. They're also using the Tasty Trade method. Remember how I was talking about how SEPI is a little steadier, but they're using monthly options. Same thing Big Y is doing. But Big Y only needs to pay a 12% yield. So they're using monthly options, and they don't necessarily sell all of the contracts because they only need 1% a month. And those monthly options can go further out of the money, but they get a little bit less, so they get more upside. And yeah, Big Y is something special. All of these are. I love all of these in their own way. These all have special characteristics. K-Silv and then K Gold rounding out. I need to buy K Gold and then Misty's 1%. All right, guys. So what do you guys think about that? I'll take comments, questions, whatever. Katy, Texas in the house. Heck yes. I have my 2 best friends in Austin. One's from Cyprus and one's from Katy. And shout out to Katy. Heck yes. I love my Texans. Home of the donut ball. I've never been to Katy. I've heard about it my whole life. I've heard that there's back in even the 80s, I was hearing about when I was in high school that it was just a mega suburb that just grew and grew and grew and grew for miles. All of West Houston was, I guess, but I never really heard of Cypress. I always heard of people talking about Katy, Texas, but it's, Cypress, home of the outlet mall, correct. Home of the outlet mall on the world's biggest highway, right? I can't believe it's a bigger highway than the 405 or the 5 or or one of those. Those are some behemoths also, but isn't it the world's the most lanes? It's the widest highway. So you're on the east side, home of no mall. Yeah. Now the east side is home of you got Johnston over there. That's the southeast side, right? And you're on the way over there to the kind of the Pines and stuff. It's probably, I'm just guessing, and on your way to Louisiana, you're close to the casinos, probably closer to the casinos a little bit on the border of Louisiana, I would think. I had a job in Athens, Texas once. I was in construction for a while as a project manager building a Ford dealership, McGillivray Ford in Athens, Texas. And as soon as quitting time came, I drove to Shreveport. I like to play cards. I like to play dice. All right. I hope I haven't missed any questions, and I think I got them all. Okay, so that's wonderful. I think this live stream's going really well. All right, what else do you guys want to talk about? We can talk about anything. So, whoever was asking me about WPay, do you think 15's enough for WPay? I'll take opinions, but I think my 4 horsemen look pretty strong. I have 4 horsemen, then with BITK, is pretty close to a 5th horseman. So anyway, no, you don't like it. All right. All right. Well, that's fine. That's fine. Um, okay. Oh, so I see. Okay. Let's talk about this one. I didn't see this one. ICOI will beat BITK in a massive yield chasing. Interesting. Okay. I don't have a problem with ICOI. Except it's based on a single stock. Bitcoin's BITK is based on Bitcoin, but it's more like a whole industry, but it's probably the same. Yeah. Heck yeah. If you like ICOI, heck yeah. Let's look at that. Yeah, especially if you have if you're a lot of it is what the underline is. If you're a big believer in Coinbase, maybe you have a brother-in-law that works for Coinbase or whatever, or maybe maybe you're a beta tester for their products and you know some stuff that's coming out and you really whatever. Heck yeah, that's the battle right there. All of these, anyone can sell options. The options bring in money based on the IV. You guys get that. But so that's part of the equation. But then the other part of the equation is what's the underline you're putting it on. So let's see. I like BITK, how they're uncapped at night. It's going to be good for bullish market. But heck yeah, there you are. You're stomping by BITK. You're saying, hey, BITK, get a load of this. Heck yeah. ICOI is on my max factor. I look at it all the time. We're going to have a Coinbase night on the daily factor. Maybe you'll watch that show and it probably will win. It'll probably win. Oh, Penelope's in the house. Hey, Penelope. ICOI has extreme yield. It sounds too good to be true. All of these sound too good to be true. If you're as old as I am, anything that yielded more than 10 back in the day was literally a yield trap. And, it literally because they were like bonds that really yielded 5 and they were paying you 10. I don't know how that's legal. And then those were programmed to lose money. I guess if interest rates would go up, maybe it'd bail you out or something. But anyway, but heck yes, ICOI is a good one. So do you guys like ICOI better than the counterparts? Let's look at what is Yieldmax, or not Yieldmax? What is Roundhill? They have CONW, I think, right? No, they must not. Surely does Roundhill not have a Coinbase W series? COIW. What am I talking about? Of course. All right. Well, look at that. Well, they both get to the finish line. Which one's the better one there? Which one do you think is the better one there? I say ICOI because it protected capital better. They're at the finish place at the same time. Just based on that short time frame. That is a good look for ICOI. That is a really good look for ICOI, protecting that capital. Like one of my good friends says, that's job number 1, and I've stolen it from him. Yeah, good job. Coney's beating it by a little bit to the finish line, but once again, ICOI, it looks like protected capital a little bit better top to bottom. And that one looks close. That one looks close for sure. Let's see. So many good choices out there. Let's go back a little bit further. Yeah, there we have it. Yeah, like I say, I never see what the problem is with these Yieldmax ones. If you need a lot of yield, if you're a yield chaser like me, some of them can work out really nicely. But anyway, it's a short time frame. That's only, since April. See, ICOI doesn't have really, it probably has a higher yield. And so if it has a higher yield, that's fine. Then I'm all right with a little bit worse upside performance. So let's just check out this yield. Yeah, look at that. Dividend's $34 per share. You got to be kidding me. We'll call it 35, and that's in like 0.6 of a year. My Lord. So 35 on a $48 investment. That's impressive, but so's 439 on 7. But I think ICOI has it beat. Well, since we're talking about this, let's just go to the max factor and let's just look at these really quick. This is the latest. This is based on today's results. Let's just get a little alphabetical order so it makes it easier to find. Let's see here. Oh, that's just the one we did tonight. Let's do this. All right. So there's ICOI from our friends at Bitwise. Is that right? Is that Bitwise? Yeah. Does Granite Does Granite Shares have one? We'll just go to the C's and see what's there. We'll just go to the C's and see what's there. That's exactly why I invented this, because there's so many of them, I can't keep up with it. And I mean, this is a great resource. Rex. Anyone like the Rex ones? I don't know much about them. I like the prospectus, but that doesn't always. I like the strategy. And what I like about the strategy is there a mix between they're doing kind of the round hill strategy with half and the yield max strategy with half. So I think it might be a compromise. All right, COIW, and then of course Coney. All right, let's just copy and paste this onto its own sheet, and we'll take a real quick look-see. You guys can't tell anyone, though, because I'm still going to have that show on Coinbase, but I'm just joking. We'll probably still have it because people will still be interested. All right, so let's see. Oh, I've screwed up something. Hang on here. Bonus max factor content. All right, we'll make this a table. All right, so we'll just do the same thing we did. We'll just go through it. So yield, I guess I don't have to resort every time. So yield, the winners, ICOI, of course, 200%. My Lord. Anyway, so let's see on NAV, it's gone from 49 to 30 this quarter. Okay, but like I say, if you're paying that kind of yield, you can afford some NAV decay, and plus all of them have had some. And this didn't have decay. It's just the stock going down. You guys get what I'm saying. All right. But so as far as NAV goes, the worst one is ICOI. The best one is Rex. As far as, price doesn't really matter. Yield, as far as yield, the worst one is Rex. So that would make sense. NAV return and yield lots of times have an inverse relationship. So that actually makes sense. So let's, on volatility, there are three of them are about the same. And then COIW is a lot more volatile. That's a good look for ICOI, that it's less volatile despite that high yield than COIW. I bet, let's see what we have here. COII from Rex paid a 53% yield, down 21% on NAV, not very volatile. But anyway, COIW, CONY, and then ICOI on the max factor. All right. Oh, COYY. Gosh darn it. Has that been out 3 months? Let's just, we saw which one won. Let's just do this. Sorry about that, CO. When I do the real show, I'll make sure that one's on there. Let's see if that one can beat Coney, because Coney's the champion so far on this as far as total return goes. The max factor didn't like it, but yeah, COII protected capital a lot better, but it got to the finish line a little bit later. Dividends reinvested, dividends not reinvested, it didn't matter, but it did a really good job protecting capital. COYY did. All right. Well, I mean, let's compare that to the ICOI. COYY, ICOI got to the finish line. COYY, for some reason, those I'm having a hard time, obviously. That's why I don't really understand them as much, selling the put spreads on levered products. I was satisfied with YSPY. I'm up money, but yeah, I'm going to cut it. So I need to get some ICOI. I'm just done with single stocks, but I mean, maybe that's not, maybe I need to be undone with single stocks. It does look impressive, but yeah, of course, bigger yield, 100% bigger yield, massive yield. I'm all about massive yield. Max factor, all it does is just one way of looking at it, and it just looks at the last quarter. I'm always talking about variance. So depending on what happened in the last quarter, it's just, but at the same time, I wanted to keep it short to try to keep some factors and momentum in there and stuff. But yeah, it is impressive. It is definitely impressive. COYY, sorry about that. Futures are still up for tomorrow. Heck yeah. Well, that's awesome. I'm glad to see it. I like when those futures are up. All right. Well, it's 10:16, so it's 11:16 on the East Coast. I guess the game's over, or the TV went off, I guess. I think it timed out. If there's no other questions, and I don't mind sitting around and talking about stuff some more, I was glad that we got into that Coney content. I finally got the new max factor, like where it's usable. Used to always be broken, and but I finally got it thanks to Rob O'Toole. But we can do a little market check here really quick. Speaking of Rob O'Toole, this is he's the developer. He's a mobile app developer. Used to work for NVIDIA, really sharp guy. He's on the live stream sometimes, and he's in the comments. His name's Rob. He's part of Rod's crew also. I think he's part of Rod's crew also. Well, let's just go to the dashboard and kind of see what we look like today on the dashboard. But yeah, this is his software. You can get a free trial at stocktools.app/max. Let's just see what this market dashboard's looking like. Yeah, I mean so that was for the day. SPY's basically flat. Boy, I wish the Russell wouldn't have been down. It's not usually good news when the Russell's leading on the way down either. Then, and I wish Bitcoin would turn around and go back up. But anyway, gold, gosh darn it, GDXY went up. It was up like 30. I could have got 30 more cents if I wouldn't have blown out of my whole position yesterday. Oh well. Hopefully, though, once I get a new gold surrogate in there or K-Silv, I think K-Silv was even up today. I saw it on my end of day, it was up. So hopefully I will replace that exposure and get back on the gold train. Jackson, knock it off. Jackson, knock it off. Hang on, Jackson. All right, sorry about that. So energy was the best performing sector. We have 3 sectors bullish, 7 bearish. Yeah, that energy. I wonder if the other day I was looking at Bloom Energy. I didn't see it today. It was up like 20% the day before yesterday. But yeah, so here's this XLE, the XLE, which is the energy, ETF versus the SPY. It outperformed the SPY, relative strength analysis. Then we had technology. The XLK also beat the SPY badly. Good job. Industrials had a good day as well. Utility, communications, consumer discretionary, healthcare, financial materials, consumer staples were pulling back. Then I really like this tool in here too. There's a lot of option tools and there's a back tester in here, a lot of stuff that's in Tasty Trade, but this thing right here is really cool. Let's just see what the best ETFs of the week have been. Let's just line them all up. This is like his own max factor. This is the Rob factor. He's data driven also. Let's just line them all up with each other, all the ones he has in here, and look back a week, a day, and a month or whatever. Like I say, if there's any questions, anything I'm talking about that you guys want to talk about more, put it in the comments. Come on here. Let me have, okay, there we go. There we go. Yeah, so this includes like 15 Round Hill Weekly Pay funds. So and it's a pre-category. So if I wanted to compare Round Hill Weekly to Rex covered calls, I could just compare those two. So it's like a bespoke max factor or whatever. Jackson, you got to be kidding me. You got to be kidding me, Jackson. Calm down. Okay, calm down. The other dog barks because he sees a possum or something, and then Jax has to bark. You know how it is. Dogs are pack animals. The other dog's the alpha. Jack, you're a beta. All right. Jack's a good dog. All right, so let's roll this back a week, and let's see what's been happening. Look at AMDW. Wow, beating AMD. That's wonderful. 17-14. Heck yeah. beating the parent, and it yielded over the past week 2.3% on a dividend. It paid a dividend, in other words. It pays one every week. At that rate, it's 120%. Look at NVDW, number 2, beating 17 to 15, beating the parent, HOOW. Yeah, that's why I have WPay. I just don't want to have to choose them. I mean, these are heck yeah. It's going to be a mess on the downside, but I mean, I'll deal with that when we get there. That's why I have that 10% inverse. That will help, dampen a little bit of this volatility, but heck yeah. So this is definitely one of the 4 horsemen, WPay. Anyway, then we have AVGW. Wow, they're cleaning up. PLTW, the first one that's a non-roundhill product is NV2. Now, this is a cool feature too. You can click next to them and it shows you the same thing that is at dividend calculator. It's a future value, or, it shows you the starting price, the ending price, and you can do, this is just for a week. You can also look a month, a year, whatever. It shows you how many dividends, starting price, any price, how many dividends were paid, total return, all that kind of good stuff. But dividend calculator doesn't do this. It does do this, and it shows you dividends reinvested, dividends taken in cash. And you can also switch it to nav change. I don't know, but if you wanted to, but look at this, check this out. Then you can go from here to income analysis. All right. I should do this on ICOI since we have an ICOI fan in the house. Let's just do that. Let's just do, I'll pull up ICOI in a second. All right. But anyway, NVDW, NVDA, they're just raging there now, or NVDY, I'm sorry. So that's another non-round hill product, but heck, it's way down the list. Then we have blocks. Heck yes, blocks. Heck yes, blocks doing a great job. Paid a dividend this week, just like most of them do. This dividend alone, on this one dividend, annualized to be about 38%. We'll take it. Then we have more from Round Hill, GOW. And then we have Goop from Curve, the first one from Curve. Curve's good, but I mean, lately they haven't been doing quite as well. Curve has a higher degree of safety, but less volatility and stuff. But in any event, then there's Palti. All right, so let's look at ICO. Let's look at ICOI. Let's just do it like this. All right. Wait. Did I pass? I missed IQQ. Rob doesn't have it in here yet. All right. Well, I'm going to be talking with him this weekend. I will have him put it in here. We can add it manually, but I'm not going to mess with that right now. You guys are probably sleepy, and that's cool. But you can compare any 2 stocks with this tool also. It's just like a combination of a lot of stuff that's good. All right. And I'll make sure COYY is on mine. I think it is. I think I just missed it when I was picking it out. Or maybe it's not. It could be that it's not 3 months old yet. There's some of them that aren't 3 months old. Okay, so hang on here a second. Yeah, let's go get them, Jackson. Silver probably has more room to run. I hope you're right. You like Tesla Tuesday? Thank you, Joe. Appreciate you. I did hear they're supposed to launch soon. I did not hear a date. Okay, so I'm all caught up. What do you think the KYLD will fund? Okay, well, Curve, it's kind of their brand to pay. Look at KQQQ, greatest fund in the world. It just pays 9%, but it's trying to do a lot of the same stuff that, say, like a QQI is doing that pays 14%. Okay, KYLD is trying to do a lot of stuff that Alti's doing that pays 70 or 80%, something like that. So I say using the same ratio, 40%, maybe 50%. What are you guys thinking on KYLD? And that's without knowing anything. We'll start as soon as it comes out. We'll look at the trades and we'll see what they're doing and we'll get a better look at it. Yeah, GLDW and GDXW will debut tomorrow from Round Hill. Maybe I need to put one of them in instead of, who knows? There's so many choices. Is Chippy better than GLDY or than QLDY? Well, I'm going to say that's like saying is Marilyn Monroe hotter than I don't know. I'm trying to think of somebody else that was hot back in her time. Is Kylie hotter than, I don't know. You know what I'm saying? It depends if he likes blondes or brunettes. Chippy's based on chip stocks. QLDY is based on the whole NASDAQ. So that's the first thing you have to decide. What do I think about chip stocks? I mean, if you have a real bullish opinion of chip stocks and you don't mind putting down a little extra risk, yeah, maybe it works for you. Let's just look really quick, really quick. I'm not going to copy it to another page or whatever. Let's just kind of bottom line it. Chippy, okay. It's paid $11 in dividends, 34%. It went from 53 to 59. That's good. 12% NAV. Heck yeah. I mean, 24% volatility, twice the volatility of the broader market. So that is definitely a good one. The max factor is 1.7, and on QLDY, it is not out yet, but let's just think what we know about QLDY. Yield, QLDY is going to be similar. On NAV, QLDY has been performing pretty well. I think it's possible QLDY's NAV, if it would have been out the same amount of time, would have been up something similar to that. I think they're in the same ballpark. I'm trying to defer because it's a blondes versus brunettes question. I mean, versus redheads. I mean, any of them could work. Some people would really just rather have a blonde. If you just really want a little extra risk and you don't mind focusing on the chip sector of the economy, maybe you think that maybe you have a friend that works for AMD and they're going to keep innovating and stuff that's going to come out. Well, maybe Chippy's for you. QLDY is based on the entire NASDAQ. So it's a little bit apples to oranges, but they have similar metrics. I think the metrics would be similar were QLDY in here. Like I say, it's not in here because it's not been out 3 months yet. And for that matter, neither is WPay. And we can look down here. Here's the master list. And the ones that are in red are the ones, BITK's not on there yet. And we can still look at what it's paying, but it doesn't even have a price 90 days ago. And this is a wrong price. BITK, Google's got that one messed up. I need to check into that. But yeah, WPay, we can put WPay here. It's not old enough to be on the list yet. But anyway, and I'll put it in red. But yeah, we'll see when it's coming because we'll look at the inception date. So September 4th, so October, November, December. December 4th, it will be a part of this. And yeah, based on what we saw on Rob, see, that's the good thing about Rob. Rob is a programmer. I'm not a programmer. So on Rob's, you don't even have to be out 9 months to be on his list. So, but just by looking at Rob's stuff and by looking at the 1 week performance, I mean, WPay would be absolutely setting the world on fire right now. So, I mean, because all of the components were right up towards the top. So, I mean, yeah, it's a good one. WPay, and I'm glad it's one of the four horsemen. WPay, and the only pushback I got from any at all is I get an idea that you guys weren't, or some of you guys weren't as excited about BITK as I was. And maybe there's maybe better ones out there for that. And that could definitely be, I mean, that's, WPay, it's a short time frame. It's a month and a half, but it's winning every sector of the it's winning both sides of the line. It's winning on offense, it's driving up and down the field, and it's winning on defense. It protected capital better. So yeah, there's a good one. Maryland versus Audrey Hepburn, exactly. Yeah, exactly. I was trying to think. I was going to say Betty Davis. I was just trying to think. And then I was thinking she wasn't even hot, but I was just trying to think of names. Greta Garbo, or anyway. My analogies sometimes are jacked up. Jane Mansfield. There you go. They were both pen up things. Yeah, it just depends on which one you like. I mean, exactly. So I just can't. Oh, you meant Chippy and QID. Oh, you mean they're so different from each other? Yeah. The Jedi, have I seen the Jedi ETF? Yes, Joe. I have seen it once. I like the idea of it. I don't believe it was a yielder, but let's look really quick at FinViz and see what we can determine about it. The only reason I say it's not a yielder, because if it's not a yielder, regular things work. You just look at total return and stuff. But on these ones that yield 50, 30, 70, 190%, they broke the matrix. They just, I mean, it just, because that's not supposed to happen. So, I'm mainly interested in catching the ones, trying to specialize kind of in the option high yield ones. But we can definitely talk about anything. Like I say, these are how you build generational wealth. It is growth stocks, buy and hold. The only people building generational wealth from the high yield funds, and I've said this before, is the fund managers. That doesn't mean they're bad, though. The high yield funds are helping people retire. They're miracles. You guys have no idea compared to what you used to have to do if you needed a little extra money. You used to have to go get a literal yield trap, where these are not literal yield traps. Yes, some do better than others, but they aren't literal yield traps. A literal yield trap is where you're going to lose for sure. They're designed to lose. So in any event, yes, it does not look like it pays a yield. It has a 69% expense ratio. But yeah, I think the drones are a growth industry. So I don't know if you guys saw Matthew Tuttle. He's big on that the market's no longer going to be, get the NASDAQ, get the SPY and everything's fine. It's going to be, what did he call it? Factor investing, or not factor, theme-based investing. And we were talking about themes, and I said DeFi, because I think that's a theme, like what Blocks does, Mara and all that kind of stuff. And he goes, that's not really a theme. Or he was the one, when he means themes, he was talking about drones, life extension, like cutting edge stuff, quantum computing. And those are the ones that he's focusing on. So let's see. Let's just exit this page. But yeah, that has Palantir, Rocket Lab, RTX, L3, KTOS. I think this is a short right now in Salty. I think Salty short KTOS. Anyway, all right. I'm not trying to bore you guys. If you guys want to go, feel free. There's 58 of you here. But yeah, of course, I love to answer questions. That's what these are for. That's what these are for. I may not be the smartest influencer. I may not be the best looking, not the youngest, not the wealthiest, but I'm the most accessible. Let's just say that. I'll answer any question, any reasonable question. Yeah. So, oh yes, MSTK does look interesting. Heck yes, it does. So get this. You guys love T-SPY and TDAC. A lot of people do, right? Well, the magic in their formula is they're using ODTEs, 0-day options, selling the option in the morning, covering it at night. So they're capped during the day, but the day only has 8 hours. The trading day, 7.5 hours. But now that, Bitcoin's a 24-hour asset, it trades 24 hours. So the whole rest of the time they're uncovered. So yes, that's the strategy for TDAC and T-SPY, and it's one of the little secret sauces. It's also the strategy for BITK, and that's why I like it, and that's why I'm probably going to use it. And I'll listen to what you guys say, but it's probably going to get some BITK. But yes, so MSTK does the exact same strategy except with micro strategies. So that's going to be for the Misty Mafia. So they're going to do 0 DTE options, which there isn't even such a thing as, but banks can do them with each other. They do them with swaps and flex options. And so, yeah, they're going to be uncapped tonight on micro strategies. Should do better in a bull market, worse in a bear market. The market, the momentum, lots of times the move happens at night in the direction of the momentum. Somebody did a study and found out that X amount of the gains were made overnight in the past 20 years. Well, the past 20 years we've been in a raging bull market, but yes, a lot of the gains happen at night. To me, that's the people fixing the market. Those are the guys trading when we really can't. Nowadays, we can pretty much trade 24/7 because of Hood and Robinhood, and and now the people can trade Bitcoin. We've democratized finance, but for a long time, that was the pros screwing you over. So somebody figured out, so a hedge fund manager, somebody wrote a white paper in like 2015, and it's a well-known fact, and it's called the night effect. I've talked about it. Brad, Income Architect, has talked about it, but it's the secret sauce in TDAC and T-SPY. It's also the secret sauce in BITK and MSTK. And guess what else? They're also coming out with an NVDK. Guess what else? They're also coming out with TSLK, Tesla, 0-day options. So yeah, it's just a great, great, great time to be an investor. What is that saying? Same as QLDY with strategy, or compare, or so it's yes. I'm sorry. So it's QLDY with strategy. No, I'm sorry. Because QLDY, I'm trying to think. QLDY, they get extra upside by selling puts and keeping and owning stock. They have a little different technique to get out the extra upside. What it is it's T-SPY with its T-SPY strategy, or TDAX strategy with MicroStrategy stock. And that's the same thing TSLK is going to be doing. And NVDK. And those aren't out yet. But yeah, absolutely. Absolutely. Yeah, I'll be looking for gold tomorrow. And really here's my plan for the next couple of days. I'm going to start scraping the sites, and I'm going to, for positions, and I'm going to hopefully get Curve's positions the second they print them on KYLD. And I'm also going to hopefully get Rex's positions. I don't know if Rex publish, and I'm trying to think of how they publish, but I'm going to scrape the website or just check it every night. And that's the next big thing I'm going to have, is I'm going to be all over. Okay, what are they doing here? Are they doing callers? The most interesting one, just by looking at the prospectus, it sounds like Rex is going to do a different strategy on the way up than on the way down. And that would be great. We all know, or you guys know, I know, but Alti does much better on the way down because of the callers. It's safer than relative to blocks and LFGY. Well, but unfortunately, it does a little bit worse on the way up. Okay. So these guys, based on the prospectus, I think Rex is going to, they're going to sell premium all the time, but they're going to sell premium in such a way to uncap upside when they expect higher prices. And then they're going to do the reverse when they expect lower prices. To me, that means maybe they'll put on callers when the market's bad. So they'll imitate Alti, and they'll get Alti's good qualities on the way down, which is a limited downside, or they'll try to. But then if they can do different strategies when they expect higher prices, to the degree that they're able to predict, and that's not perfect, but I'm sure Troy Cates knows what he's doing, and those guys over there know what they're doing, or hope they do. I know they do. They're going to put on, maybe they'll do lightning spreads, maybe they'll do covered call spreads, but somehow they're going to save some upside for up days and try to cut it off whenever, like during April and March. I guarantee you they would be in callers and they would move really close, because these guys get compensated on how well they do. They aren't trying to just make a fund that loses money. That won't do anything for anybody. If they make a fund that grows money and that grows AUM, like they've done with Alti. Alti's been tremendously successful, went from nothing to 3 billion. Yeah, it's going back down to 2 and probably then to 1.5 million or something, but it'll stable out somewhere there. But they just have to make room for blocks and WPay and some of the other ones. But yeah, Rex is a great idea. So that's going to be the next big. It's really the only way I can add value to you guys, or like I say, I may not be the best looking, may not be the smartest, may not be the best talker, the best prepared, but I really like to dive into the details of these option strategies and try to predict and what the qualities are going to be, and stuff like that. So I can't wait. So be looking at that. I'm going to try to be the first one with the positions and also the strategy, because I'm reading between the lines. We don't really know yet. But I'm telling you, that's the way I read the prospectus. That's what it sounded like to me. And on KYLD, they didn't really give away much. It just said they can basically do anything. Naked, covered, put spreads, call spreads, covered calls. They can do anything. So, but like I say, when they start making their first trade, we'll kind of know what they're doing. Okay, yes, TSYY did change their. Oh, yesterday. I hadn't heard about that. Okay, well, interesting, Joe. Interesting. Okay, well, that's, yeah. I mean, I'm curious on Granite shares. I like Granite shares, but let me show you something. Jackson, calm down. Please calm down, Jackson. Please quit whining. Hang on. Since he's not barking, I'm going to let him out. Jackson, don't bark. Don't bark. Don't bark. Don't bark. He just wants to go visit. So let's see, TSSL or TSL. What's the leverage Tesla? No, TSLL. Okay. So something like Granite shares, they do that trade. They generally sell it at the money option and then they buy and out of the money option. Sometimes they do it more like this. They'll move the strikes down a little bit and take less premium. You know, that one you get money up front and you have if the market doesn't drop at least 7%, you just keep the money up front and do it again next week. They do weekly options, but they can do a little better if they sell right at the money or in the money. When they first came out, they were selling out of the money options. And I've checked a couple of times and they sell at the money and sometimes even one strike in the money, which is really sweet because that you actually get a little upside. So this is a great trade. That's kind of their normal trade right there. Based on what I've been saying, based on what I've been seeing. But the thing about that is there's nothing wrong with that. Nothing wrong with that at all. But let me show you what you've done there when you do that. All right, you can have TSLL. Instead of doing that trade, you could buy the shares. Now, they don't do that. You could buy the shares and then you could, okay, and instead of selling a 22.5 strike put, you could sell a 22.5 strike call. All right. That's a caller. You have stock plus 2 options, short call, long put. It's the same trade. They're doing callers. They're synthetically doing the same. And this is the alti trade. But the alti trade is to actually have the stock, and it doesn't matter. It makes no difference in the upside. It doesn't. But anyway, so you could do it either which way. So I like what Granite Shares is doing. But the difference is they're unlike alti. They're selling leveraged options. So it just adds a little bit of a different dynamic. But that's the trade right there. Okay, and you want to see what a lightning spread is? And Granite doesn't do this, but this is how Blocks would do it. So let's say Blocks isn't going to do TSLL, but just let's say they did. I mean, Blocks would do Morrow or something, but it's the same theory. So they're going to do the put spread, and that put spread brings in an $83 credit. It ties up $250. You get income. You get that every week. It's repeatable. You have capped downside. You have capped upside, right? Here's the lightning spread. All you do is you buy stock. The reason it's called the lightning spread is because you have a double zigzag there. Where it zigzags steeper in the middle, you're double long the market there. Between the two strikes, between 20 and 22.50, you make or lose twice as much. So it's local leverage. It's localized leverage. And then they don't call it that. It's synthetic leverage, localized leverage. The good thing is once you get back to where the zigzag goes straight again, you're just single short. So this is you're single short pretty much for a big move, but you're double short right here in the middle. But if you close on the right side of this, you have made this credit, you pocket the $83 and you get the same upside as stock. Because remember, you have stock. You sold puts. You don't have to do anything. Your stock doesn't go away, you know. But just because of the mechanics. And here's the way YieldMax does it. Let's see, duplicate. So YieldMax, and they wouldn't do TSLL either. I guess they could and say, and not alti. I'm saying here's what like YieldMax's covered call funds do. So all they do is they have stock. Instead of doing a put spread, all we have to do is say switch to call. Switch to call. And I did something wrong. Oh, I have them the wrong way. They short the nearer one and they buy the further one. All right. And that's YieldMax's definition of uncapping upside. So you can see the green and red line is what YieldMax does, not Alti. Alti's a caller. It's different. We already looked at that. I'm talking like YMax. I'm talking Tesla and all those. They generally sell covered call spreads. So YieldMax, they also get a credit. It's an income play, and they do better on the downside, which, you know, I'm conservative. That's why I like YieldMax. And when the market drops, they generally, you know, do better. You saw that Coney, because the market's been bad, it was outperforming any of the high flying ones. You know, or a lot of the high flying ones. Well, that's why it's exposed to less downside on the way down. But anyway, but on the upside though, they say YieldMax doesn't get any upside, and it's because of this big flat spot. YieldMax starts getting additional upside, but only if the market goes past the top strike. But YieldMax is, you know, technically unlimited because they can keep going on up to infinity. But you can see this white line here, which is the other strategy, which is a lightning strike strategy, does better on the way up. And because there's no flat spot, it's the same as stock on the way up. On the way down, right there between the two strikes, you get double downside. So that's why the line goes steeper. But then the line levels out because you're back to single long side or single long exposure. But still, compared to the YieldMax strategy, the covered call spread protects capital better. The lightning spread gets upside better. Either one of them could work for you, or neither of them could work for you. It just depends on your goals, aspirations, dreams, whatever. But anyway, I'm glad to see they changed their perspectives yesterday. The guys in my Discord are good about getting me prospectuses. I will read that and make sure that the stuff I said is accurate. They may have done some more stuff, but I read their last prospectus change, and I'm basing that on their last prospectus change. And I looked at some positions in their Tesla surrogate, and I looked at some YSPY positions to see what they were doing. And you know what they're doing is cool. It's basically callers. I mean, it may say a put spread, but like I just showed you, a put spread's a caller. Capped upside, a synthetic caller, and you don't even need stock. So it saves on money. And then because they don't have to spend the money on stock, they buy T-bills with it, and they get a little extra juice from the T-bills. So that you can do it any of these three ways. You can do put spreads by themselves. Instead of doing a put spread, you can do a caller, which is the same thing as a put spread. Graphically, if you use the same strikes, it's the same thing. Or you can use a covered call spread. And you saw that has advantages on the upside, or advantages on the downside, disadvantages on the upside. But here's the other thing you can do. And here's probably the worst thing to do. You could do a third strategy, and it's this one. You don't do the spread. You just do a straight covered call. So just remember what that looks like. And we're just going to exclude this. Okay. And so that's a straight covered call. And that's the worst of the three strategies because you have capped upside and unlimited downside. Now, your downside isn't as bad as the lightning spread. That's why I'm always cautioning people. The lightning spread will add a little downside. It just, that's the way it goes, but you get all this upside. So I think that's the worst strategy. Just, I mean, from my standpoint, here's the second worst, or second, that's the most bearish strategy, or the most conservative strategy is the plain old covered call. The second most bearish strategy is the covered call spread. You still have uncapped upside, but you have to get past this flat spot. But you do better on the downside. Then the best strategy, in my opinion, is the lightning spread. I mean, but once again, you need to make sure the market's going up, because if the market starts cratering, you're going to add some extra downside. So it's more of a bullish play. I was going to make a video, an explainer, but that's basically what I wanted to explain. So you guys saw that. I'll try to make a real video out of that. But I think there's some confusion about put spreads and lightning spreads. A put spread is just the put spreads by itself, no stock. So essentially that's a caller. So it's the same thing that Alti's doing. Very similar. And I love callers. Callers are great for conservative people. I mean, because you have capped upside, but you also have capped downside. They're the safest. You saw out of the terrific trio, which one was down the least today? It was Alti. It wasn't all because of the puts, but they darn sure helped. Okay, Joe, what are you saying here? Going to a spread that will lower their, yeah, absolutely. Absolutely. For every give me, there's a gotcha, like Dave Schultz says on Tasty Trade Show. For every give me, there's a gotcha. So yeah, you do a covered call spread instead of just a covered call. So here's the other way to look at it. The covered call, the method I call the least bullish or whatever. This right here. Look at the income off this, $58. Okay. Look at the income off the covered call spread, $51, just because of the cost of this extra option. It may not seem like much difference, but it comes out every day. So you get a little less premium, yes. But and then the other two fall in there also. And then the other two are about the same. Then a put spread and a caller, the premium's about the same. But yeah, covered call spread, you get a little extra upside, but you cost yourself a little yield. All right, guys, you want to talk about anything else? I'm glad you asked me those questions. Those are the kind of questions I like to ask or like to answer. Looking at those different strategies. That's right up my alley. If there's something you didn't understand or you want me to explain it better or slower or something else, my email is maxconvexity@gmail.com. I only check it about once every day, but I mean, you can email me there and you can hit me up in Discord. And I'm going to give you my Discord link right now for any of you guys that aren't in there. Oh, shoot. So hopefully the market, what do you think the market's going to do tomorrow? Pull back a little bit? I'd be fine with pulling back a little bit so I can buy some WPay. So what I'm going to do is I have stuff to buy, have cash. If it melts up tomorrow, goes up, I'll sell one of those things that I need to cut. Maybe cut the rest of the GPTY into another big up move. And then, but if it goes down tomorrow, I need to add a little extra WPay or add a little extra block so I can use the pullback to add a little bit of that, or any of the other things I need to add. All right. Got started. All right, join us in Discord. We're friendly folks in there. And then, yeah, buy some ICOI. It looks like I need to. I didn't realize. I knew it was yielding a lot, but I didn't realize it was yielding that much. That's incredible. I always say I'm a yield chaser. Like I say, but I don't just want yield at any cost, or else I'd get Murney. I mean, Murney yields 300 or whatever. You know what I'm saying? I want yield, but I want something good. So, but yeah, if somebody told me, if I had a dream tonight that Coinbase's price was going to double in the next month, I would get ICOI tomorrow. Since I don't know, that I don't know. But if I knew that Coinbase's price was going to triple in the next year or something, yeah, absolutely, ICOI, absolutely. But if I knew that it was going to go down, I would get Coney. Coney will protect your capital better on the way down, but it'll cost you a little bit on the way up. All right, so there's Discord, and I'm going to put this in there also. Oh, hang on, I got caps on. All right, check out that Stock Tools. That was pretty cool. I mean, that's a really cool piece of software. It's free for you don't even need a credit card. You just get a free deal or a free time edit. And then if you join in the last 2 months, I get a little commission. I haven't earned any commissions yet, but I'm brand new at, I really like it though. I really like it. See if you guys like it. Yeah, the distributions are huge. You are right, Joe. There is no doubting that. No doubting that at all. All right, guys, so I'm going to let you guys out of here. I hate to go when there's a record number of people. I've never had 61 people on a stream before, but anyway, it is getting late, and I really appreciate you guys being here. And thanks for asking me those questions and giving me a chance to talk about lightning spreads. That's my favorite thing to talk about. Lightning spreads, callers, synthetics, all that kind of stuff. All right, guys. Well, be looking for the content on KYLD and ULTI. I'm going to be the first influencer with the positions. If it's the last thing I do, I'm going to be the first one out there with the positions, the strategy, and some type of content. All right. I'll post it to Twitter and I'll post it to Discord as soon as I do it. And I'll put a video out on YouTube as soon as I can get one out. You guys have a wonderful evening, and thanks again for participating, and thanks for watching the Daily Factor. I'll talk to you later.